The International Monetary Fund is adding China's yuan currency to its special drawing rights basket, giving it prestigious reserve status. I'm joined now by Greg Anderson, Global Head of FX Strategy at BMO Capital Markets. And Greg, it's good to have you here. Welcome.
Oh, it's good to be with you.
So the special drawing rights basket already includes, of course, the dollar, the euro, the pound, the yen, and now the yuan, of course, adding the yuan, a big endorsement of China by the IMF. Wouldn't you say so?
Well, they went out of the way to make it an endorsement with Christine Lagarde praising China and reforms that have gone through thus far, financial reforms.
So you don't think it should have been included?
Oh, no, I think it's probably the right step forward. But actually, if you don't mind, the IMF used the term renminbi rather than yuan. And that may be an important distinction. There's a big question that the IMF left open. There are two versions of the Chinese currency. There's the onshore, which goes by the name of the yuan, and then the offshore version, which goes under the acronym CNH. And renminbi at this point is like the umbrella that refers to both. Mm-hmm. And so we don't know actually, hey, which unit of the currency is included in the basket. Is it the freely traded offshore version or is it the restricted onshore version?
And explain the significance of that distinction.
So it's important because what has the IMF endorsed? And I would say that this is an endorsement more than anything really practical. Did they endorse the offshore center created in Hong Kong for free trading of the Chinese currency without government restrictions? Or did they endorse onshore capital controls, heavy intervention still as an acceptable method of currency management?
All right, but still, what does all of this mean for global investors?
You know, for global investors, I don't know that it means a whole lot. This is not like when China was accepted into the World Trade Organization, for example. That was monumental. And it's not like when a stock gets added to the S&P 500, where all of a sudden there are a bunch of fund managers that need to buy it.
Why?
Nobody needs to run out and buy renminbi tomorrow because it was put in the SDR basket. Nobody buys the SDR basket anyway. It's just, it's a symbol though.
Yeah.
A symbol that the IMF approves what at least the reformers in China have been doing with the currency.
All right, and anything to say on what this means for other currencies like the dollar, the euro? Of course, we have a big ECB meeting later this week where we are expecting more easing, which of course could push down the euro even more.
So in the basket, the euro's weight dropped the most, and then pound's weight dropped also. China was given about an 11% weight, and about 6 of that was taken away from the euro, 3 of that was taken away from sterling, about 1% of that was taken away from yen, but I guess maybe other interesting symbolism, the renminbi weight is bigger than the yen weight.
And do you think China will be more transparent with its economy, with its stock market, now that the IMF has essentially thrown China a bone?
Well, this is what I would say. I would say that the reformers in China have won a big victory, and they can go back to everyone else and say, look, if we just continue to move along the path towards openness, good things will happen to us. And so, yeah, I think it is an important step along the path towards what I think everyone wants them to get to eventually, which is a freely traded and floating currency.
Well, and on that note, we all remember back on August 11th when China devalued its currency. It sort of shocked the markets, and perhaps that was a move to appease the IMF. But can we really trust that China will not intervene any further in its currency? Because, of course, one of the requirements for inclusion into this basket is to have the currency trade freely.
So freely usable. That was the requirement. That was the question whether they would meet, and that they failed on in 2010. But the IMF has gone out of the way to say, no, this does not mean that you don't ever intervene or that you have to completely strip out all capital controls. It's pretty clear they will not do that by October 1st, 2016.
All right, Greg Anderson from BMO Capital Markets. Thanks very much for coming in.
Pleasure to be with you. Thank you very much.
I'm Scott Gamm, and you're watching The Street.